Well, there's quite a lot to talk about today. The S&P is looking quite weak, to be honest. We've had more downside this week, and to me, it looks like you are beginning to roll over on the S&P. Interestingly, I redrew the parallel channel because I think if you actually do connect these highs here with the sort of lows from the past, even going back to 2020, it's arguably the case that you were just wicking out of this parallel channel several times on the S&P. And if that were to be the case, then arguably you've already tagged the top of this powerful trend line, which in my view would suggest that you could very much be going back to the bottom part of the parallel channel. You know, typically if you hit the bottom part, you then go back to the top part of a parallel channel and vice versa. So we would have to expect that going back down to sort of 560 on this particular chart would be a reasonable assumption to make, I think. Of course, we may try to hold at the midpoint of the parallel channel and come down a further 5% or so, something like this. If you can hold that level, then maybe you are able to go a bit higher on the S&P, but this is not a great look. You know, this is sort of a rounded top type pattern. You can imagine if the chart were inversed. In fact, I could make it inversed. You know, this is essentially looking to me like a cup and handle pattern, right? You might have a bit of a pullback coming and then you head a lot higher from there, potentially. So keep in mind that's the inversed S&P chart. So we kind of imagine, you know, you're going to have maybe some movement like this coming on the S&P. This is very much a distribution type pattern, smart money selling and getting out of their positions before potentially a lower move. So I'm quite bearish. This chart looks pretty bad. I want to be bullish. I mean, the VIX is very high. It has been for quite some time. The volatility index, you know, it's just trending up essentially. And typically, if the VIX is elevated, you expect it to come back in at some point and to have an up move, therefore, in the markets in general. But yeah, this chart looks very ugly. And if we're just going purely on technicals, then we can see in the past, whenever we had a sell signal, we did actually end up going to the bottom of the parallel channel. You can see here, right? Essentially every single time there's been a sell signal. Back here you had it, you went to the bottom of the parallel channel. Here you had one, you went to the bottom of the parallel channel. Even here you had one and you still went to the bottom of the parallel channel. Likewise here. So what does that mean for this signal here? Well, if we were not to go to the bottom of the parallel channel, that would be a first. That would be quite unusual. You know, that would be a one out of 6. Essentially chance to not go to the bottom of the parallel channel, I would say. So more likely than not, we are going to head there. It might take a little bit of time. You know, we might bounce around here. We might put up some kind of a fight at the midpoint of the channel before heading lower, but I think it is pretty likely we get down there. So that's my insight on that. Of course, the QQQs is a very similar sort of story. Arguably, we are in this kind of a parallel channel, and we may be headed down as low as 480 on the QQQ. That is a possibility. Of course, the market's been holding up quite well despite all of the negative news about the Iran war and private credit fears and all this kind of stuff. So pretty interesting. Makes you wonder, could we in fact be climbing the wall of worry and going higher? I don't think so. I think you are still most likely to break down. Perhaps the market's just waiting for positioning to unwind a little bit in terms of people who are hedged. As far as I understand it, a lot of people are protected to the downside right now with puts and this kind of thing. So once those expire, once the insurance goes away, and perhaps the market will have a bit of a rebound, as we talked about, this kind of cup and handle pattern. Maybe you have a little bit more downside and then you reverse and you get people excited and the positioning changes, people are no longer hedged, and then the market can break down. That would not surprise me in the slightest if that's the kind of moves that we're going to be getting going forward. But hard for the market to break down right now since everyone is so heavily protected, essentially. Oil is continuing to move up. I mean, this chart just looks quite scary, doesn't it? If we assume that oil tends to be negatively correlated with the S&P, with the markets in general, then if this continues to move higher, we do expect the markets to be going down as a result, at least at some point in the future. The higher the oil price, the worse it is for the economy in terms of higher inflation, higher input costs on pretty much everything, which in turn means less demand. So you have a nasty spike in inflation and then lower demand, which in theory should reduce inflation, but either way, not good for the economy and pretty nasty stuff, particularly if oil stays at elevated levels. Around this sort of level can get quite painful for the economy. I did say in the last video, I thought it was likely that we would hit the top of this parallel channel. We actually got very close before the various governments and the IEA came out and said they would be considering releasing a bunch of oil onto the markets to try to stifle this move. So basically, you've got all of the important governments, you know, France, Japan, America, all of these countries trying to suppress the price of oil. Meanwhile, the price has been going somewhat parabolic due to the conflict, due to the destroying of a lot of the refineries in the Middle East. A lot of the countries there are shutting down their oil production, and of course, the Strait of Hormuz, also where a lot of the oil in the world passes through, is closed, and not many ships are able to go through at the moment. So the supply of oil really constrained at this current time. If that were to continue for months, then you could anticipate oil going a lot higher. That's sort of my assumption of how this will play out. Of course, it's always possible you get some kind of a resolution in the Middle East, but I think just because you've taken out the Iran leadership, essentially, you've killed and martyred a lot of their top officials. I don't think they're going to want to surrender, nor are they really going to stop that conflict until they can inflict a lot of pain on the US and their allies. And likewise with the US, a little bit hard for them to just back down now. They've said they want a regime change. They want to deal with Iran's nuclear capabilities. Neither of those objectives have been accomplished, so I would imagine the conflict is going to continue, and oil prices will probably reflect that. Of course, a pretty good time for oil stocks, and even fertilizer and other petrochemical products, things that are requiring the Strait of Hormuz to be open. If the conflict does continue, then those kind of stocks will do very well. But regardless, the dollar is also actually moving higher now, which is a worrying sign for risk assets. We said that there was a chance you would just hold this parallel channel and then reverse higher, and it looks like that is probably what's going to end up happening here. Of course, we haven't yet entered a bullish regime, but I think once you do, you're going to have a real, a really big move on the dollar coming soon. We're already getting above these sort of previous highs that would have been resistance. So I think dollar most likely going higher, maybe even as high as the top of the parallel channel. We've talked about these patterns, right? You come up to one top of the parallel channel, then you come down to the bottom, then you head back up to the top. That's usually how it plays out when you've got a parallel channel in play. Now, we talked last week about the 10-year minus the 2-year, which seems like it might be going down, and if this is going down, then it means a combination of either the 10-year is going up, the 2-year is going down, or maybe a bit of both. What does that mean? It means probably there's going to be more longer-term inflation if the 10-year is going up, which it has been. Going up in recent times quite a bit. So that is pricing in longer term inflation. But the 2-year going down, if the 2-year were to come down, that would mean that the lower term rates need to be lowered, which would suggest the economy is weak. So you might have a nasty combination here of essentially longer term inflation and shorter-term weakness in the job market, needing the Fed to cut rates, which you may be aware there's a term for that, and it's called stagflation, when inflation is very high, but the labor market, the GDP, etc., are all rather weak. In that kind of environment, then stocks tend to perform not super well. It's a very choppy and volatile sort of market that you often have. And that can explain perhaps why VIX is spiking while we have these kind of more volatile period here. It could be the markets beginning to realize and price in a stagflationary environment coming in the future. Now, typically commodities, things like gold, do perform very well in those kind of environments. Again, it could be a sign of, why has gold been going up for so long? Could be that people have been pricing in this potential stagflationary environment well ahead of it actually occurring. And I would imagine gold to continue outperforming if you do have that kind of period of high inflation, low growth going forward. Interestingly, it might even be good for cryptocurrency to have such an environment play out. And I think it's possible that crypto could get a reversal here. I think a lot of people are, including myself, anticipating further downside here, perhaps to as low as $37,000 on Bitcoin. But if everyone's expecting that, you kind of have to wonder, maybe we're going to get a bit of a reversal actually, and we're going to break that sort of 4-year cycle pattern, catch all the bearish people off guard. I don't know if that's the case, but I could imagine if the Fed is going to cut rates in the short term, then maybe that will be good for the risk assets, for the Bitcoin. And this should, in theory, be good in a stagflationary environment, right? Because it's still a hard asset in some way. Yes, it's not performed as well as gold in the uncertain times that we've been in, but in terms of combating inflation in general, then I think Bitcoin should be well positioned along with all cryptocurrencies. And really, typically speaking, small cap names actually tend to perform very well in a stagflationary environment. So you can see the Russell is also doing quite okay, to be honest. We'll see if it holds up here. If it does well in a stagflationary environment and we do enter one, then perhaps small caps will be outperforming and sort of, the riskier names with a lot of debt. If there's high inflation, then you kind of wipe away the value of that debt. So it can be good for the, more indebted, smaller names, and also the real economy type plays that have, real stake in the real world, real products. You're thinking things like the oil companies, the chemical producers, the consumer staples, like all of these kind of companies tend to do well. Speaking of which, we can talk about, you've got Pepsi update, not much going on there. The oil companies, COP and Oxy, which I've got in my portfolio, doing very, very well after we had that buy signal and just going absolutely crazy. Of course, the technicals often tell you what's going to happen ahead of time. Like we had this buy signal far before the actual conflict in the Middle East, but the smart money essentially is buying up the oil stocks in anticipation of such a conflict playing out. And then when it does, that's how the chart can look almost as if you're predicting the future with an indicator like this. In terms of the stocks that we've been looking at, BMNR is in an interesting spot, still in this sort of bear flag. Of course, if we are to break down from here, going to be a very bearish thing. But I'm sort of a little bit optimistic and hopeful that you can get a bit of a reversal and perhaps get a little bit of a recovery relief rally. You do tend to have relief rallies in these long drawn out bear markets at some point. Even if we are expecting lower lows at some point, then but as I said already, stagflation could be, in theory, good for cryptocurrency. So I'm not overly bearish, actually, right now. But got to be a little bit careful here on BMNR, on MicroStrategy. Of course, the trend is still bearish. We have now tagged the bottom of this parallel channel, though. So the bull within me, it wants to say, you know what? MicroStrategy doesn't look that bad, right? We tag one bottom of the parallel channel, we go up, we tag the top, we come down, we tag the bottom. Well, what's next? I don't know. Could be going to the top. Is it possible? That would catch a lot of people offside, I think, because I think a lot of people are bearish at the moment on cryptocurrencies, very much so, and software as well. So definitely something to keep an eye on there. I'm not super comfortable because the trend is very bearish, but at some point this will turn, I think, and you will head back up to the top of the parallel channel in these kind of stocks. That being said, Hood is still just chopping around these sort of levels. We did have the sell signal, the bearish regime. Will we break down from these levels? It's going to depend, of course, on how crypto does, I think, and the markets in general. Tricky one, because if we're saying the S&P and the QQQs might be very weak and have some problems going forward, then is that going to mean crypto is also going to break down? Maybe. Typically, it has been a sign, if you have the markets in general weak, then crypto does perform well. The one thing that's leading me to believe that there could be upside in the crypto market is Circle. I mean, you've had a great breakout here, really, really strong performance in the past few weeks, up as much as 85%. I mean, that's just crazy, even more from the lows, right? 100% plus. A little bit kicking myself because I did own some Circle stock, but offloaded it after you broke these sort of levels around here. Should have probably just held it as a good sort of fundamental stock to be holding. But regardless, could be some more downside in theory. I keep saying maybe we'll retest, but the stock is looking very strong. So maybe you're just going to continue upwards. And if this is strong, then it could be an early sign that maybe crypto in general will have some relief coming. We've got ASTS still just chopping around, not committed to going to the bottom of the parallel channel. I'm still saying, guys, I think it's likely you're going to get down here at some point. Of course, we tend to go back down to the bottom once we have hit the top. That is the main signal we can take away from a parallel channel pattern such as this. Rocket Lab, again, similar story. We're nearly at that parallel channel now, the bottom of it, so maybe we'll just wait and chop around still until we do eventually tag there before deciding on a direction. We'll see. Palantir, a little bit worrying. We actually are breaking back down, so it does look like the sell signal was valid, and you are going to flip into a bearish regime. I wonder if this could coincide with some kind of a lessening of the hostilities in the Middle East. Of course, this tends to do well when there is war going on, so perhaps maybe the Middle Eastern conflict will have some kind of a little bit of a de-escalation going on. Not sure about that. Of course, they have bombed Karg Island, which is like the key place for the oil to go through in Iran, and they're threatening to sort of blow up all the oil there and whatnot. I don't know how that's going to play out, whether there's going to be, boots on the ground, all this kind of stuff. Iron, still chopping around, waiting on a direction. We've said it seems to be very correlated with the QQQs essentially at this point. And so I expect if QQQs break down, then iron will do the same. Oracle, we talked about how you've bounced from this parallel channel and prices coming back in now, filling the gap that you left behind. May continue upwards, although of course the bearish trend is still in play. Got to be careful because if you do break this support, then there are much, much lower targets coming. With CoreWeave, we're still just chopping around. I said you might get a bounce back up to fill this gap. Still think there's a possibility of that. You've had some positive price action recently and trying to hold the midpoint here of this parallel channel. You can see that very clearly, right? Price has been trying to hold that and can maybe try to get back up to the top of the parallel channel. To be fair, we didn't quite get there before. And you know what I say, we tag the top here, we go to the bottom. What's next? Well, we didn't quite get there, so maybe we're going to still try to tag the top before heading back down, right? That's a possibility for CoreWeave here. keep that in mind. Nebius has had a nice breakout from the parallel channel that we drew before here. I said, if you can get up here and get above the previous highs, that would be very bullish for the stock. There's the concern that you might end up having some kind of double top or fake out, but that's still going to be a nice strong move if you are able to get as high as there. Still another 24% upside on Nebius, so quite an outperformer right now. We've left a gap behind now at $98, something to be aware of. SoFi has been a bit of a laggard, a bit suffering recently. We had the sell signal. I said, be careful not to get trapped in this stock. You might have a little recovery bounce, as you had up to $19.5, but coming back in now. So got to be a little bit careful here. The trend is just beginning. If this were to be a very long trend, as you've had in the past, for example, the start of this long bear market here, then that could be several years of underperformance on SoFi. So I would still be very cautious on this name. Similar story with Reddit. We're just hanging around these levels, no real positive price action, and the bearish trend in play. There's support here around $120. Maybe we'll come back down there and then get some kind of a little bounce on Reddit, but really poor performance at the moment from this particular stock. HIMS has had some interesting price action since we last talked about it. A little bit of a pop up to $27 or so. We're still in this bearish trend, so I'll be watching this one. Not going to be involved, I don't think, but in theory, if you can get above the EMAs here, go to maybe $35 or so, then I might flip bullish on that particular stock. This price action is not terrible, but equally, if the market in general is going to suffer, then perhaps you're going to go down on HIMS. NEO also having some nice performance here. These stocks that we recently covered this week, I think NEO will be a strong performer, and we've gone to the top of the parallel channel, back down. Now we're hopefully going to go to the top on this particular stock. Not a bad look, I don't think. What else do we have? Nvidia refusing to break down, still holding. We've had the sell signal. It might be one that doesn't play out. Last time, though, you had a sell signal. It was reliable to send you to the bottom of the parallel channel, and I would expect this to function in a similar way to on the S&P chart. Of when you get a sell signal, you probably do head to the lower level and then decide on a direction. Are you then breaking down, or are you going to have a bit of a reversal back up? These signals do tend to be quite reliable, but of course, we'll have to wait and see on that. Can take a while for it to play out, maybe a couple of months still before we head down there on Nvidia. That's still my expectation. With AMD, I'm still also expecting a bit of bearishness coming. You're sort of just consolidating around here, though, so going to depend on market direction. Google, not much more to say other than, we are coming in now, probably need to come back down, as we said before, to the midpoint of the parallel channel, see if you can hold that. If not, head a bit lower. Meta's also very, very stubborn still. I still expect us to come down to $400 or so on Meta, and with this head and shoulder sort of playing out, maybe even lower than that, but very stubborn, doesn't want to break down seemingly, but this pattern just, it looks very scary, right? It looks like it's just waiting to dump in a big way, potentially. Amazon we talked about coming down to the bottom of the parallel channel. I do think that's likely again. Tag the bottom, tag the top. It's just a pattern that plays out very frequently in the markets. This is what the smart money tends to use in terms of their trends and technical analysis. Parallel channels, very powerful tool to be using. And speaking of which, Microsoft is back to trading at the bottom of the parallel channel. It looked like it was getting a bit of a bounce, but again, still some weakness here, and the sell signal and trend is bearish. I would imagine if you're going to have prolonged market weakness, then this stock, Oracle, perhaps Nvidia, all of these stocks may be going down substantially, and this stock and Oracle, for example, may break their parallel channel support and continue the downtrends in some way. Netflix, as we spoke about, just probably continuing its downtrend. I don't see a reason really why it should buck that. It's sort of a canary in the coal mine in some way, selling off before everything else, but I think that will probably continue. It could do something similar to what Meta did in terms of, selling off first, but not quite, being bought up. That being said, I think now that Netflix is established in the bearish trend, I do expect more downside for it, especially filling the gap around $86 seems like the most likely scenario. Tesla, I think, is rolling over a little bit in terms of the momentum. We'll see if that continues, but I'm not super bullish on a stock like Tesla at the moment. And these sort of last hopes in the market still, Micron and SanDisk looking very, very strong in terms of their trend, very bullish. And I am thinking that if you are able to break the all-time highs on Micron, for example, then you may have quite some more upwards price action to come on this kind of stock. This is probably the last holdout, and if the markets do go down, I think the Micron and the SanDisk will be the last ones to follow, essentially, in terms of the tech trade and the AI adjacent stocks. Adobe got absolutely smashed. Not too surprised by this. I mean, we are in a bearish trend. You had this recovery rally that we spoke about, but yeah, just sold off back down, and I think you're going quite a bit lower on this. This is a very bearish sign. We might tag just the bottom of the parallel channel and try to reverse, but we could get targets as low as, you know, all the way down here, $190 or so on Adobe. Duolingo is still holding the line that we drew in way back in the past. One of the first videos I made was drawing this particular line on Duolingo, so it's holding up quite well for now. Will that continue? Massive bearish trend. Of course, we could get some recovery rally here. I wouldn't be too surprised, but yeah, trend is very bearish. What else is there to talk about? UNH still in this bearish trend, I expect. We still may get down to the bottom of the parallel channel. Of course, it doesn't have to happen because we have already tagged it back here. So you may just consolidate in this range before eventually going higher. I think you may be starting to see the beginning of a turnaround for this particular stock. Maybe for Molina as well. They're sort of just consolidating if they can. I'm not sure about Molina, maybe it has more downside to come, but UNH, for example, I think might get a bit more of a turnaround going in a month or two. Bonus stock, here we go, why not? Lululemon breaking support here. These previous levels, I think you could go even as low as $86 on Lulu. We're in this massive parallel channel, and you see we did tag the top side of it, didn't quite get to the bottom, so I would expect we are going quite low on Lululemon. But yeah, guys, I think that wraps up the macro report. Essentially, expecting a little bit more downside, then maybe a recovery, getting that sort of cup and handle pattern playing out, perhaps to the downside for the S&P. Very bearish look on the custom indicator, of course. Every time, as we've said, we get that sell signal, we do end up coming down to the bottom of the parallel channel. That could be really nasty. And to be honest, if the market does sell off in such a way, then I would imagine that could be the beginning of the end of this sort of AI trade. Maybe not. Maybe you'll get the Fed to step in and save the markets by massively reducing rates, doing some quantitative easing. Not sure how viable that's going to be with high inflation from oil going up and all the rest of it. But that could be the stagflationary environment that's coming, that metals and commodities in general have been sniffing out for some time, and could explain why we've been having the sell-off in technology stocks and the riskier names and whatnot, and the transition into more defensive healthcare, staples, all the rest of it. So something to think about there. And definitely a risky market to be long the market in general. Quite some downside still to come potentially on the S&P. With that being said, I hope this video was informative for you, and thank you very much for watching. If you want access to the custom indicator, you can check out the premium service on Patreon, which will be in the description of the video. But thank you very much for watching again. I'll see you next time. Bye-bye.